Okay, hello everyone. I hope you're doing well. So tonight, we're gonna talk about mass expectation and when it breaks. What mass expectation, right? What is mass expectation? It's average amount you expect to win or lose per trade over time. So if we take like 50 trades, 100 trades, 1000 trades, 10,000 trades, on average you would want to have same win rate and risk reward. Win rate and risk reward plays core they are core inside of this idea. We're not talking about risk management, but it has to be consistent. So you want to risk the same amount over and over again, no matter what. You want to risk, let's say, like $50 on every single trade, plus minus like $5 or so. It's fine. So you also have to understand it's like a formula, right? So we have potential chart, right? When we have profit, let's draw it. So we have this is gonna be risk reward, right? It's gonna be risk reward, and this chart is gonna be win rate. Win rate. Okay. So there we go. The high win rate. So it looks like this. So the higher win rate, the better risk reward you need, right? So let me also have a chart like somewhere. There we go. It looks like this. Where is this? It's a formula. So so the idea is simple. Higher win rate to be we also need a break-even point, right? So break-even point it's gonna be different for each risk reward, right? I probably have chart somewhere. Let me get it really quick. It's really useful. A second. Yeah. This one. This one. There you go. There you go. So the idea is, if you have one-to-one risk reward, it means you're gonna risk like $1 to get $1. You have to be right like more than 50%. Because of fees, I would say like 52 to 55%. So you have to have 55% win rate. Even the best traders in the world, they have around like 54 to 60% win rate. So it's almost impossible. When math becoming interesting, when you have like 1.5, like 1 to 2 risk reward. In this case, you have to achieve like more than like 33 to 35% win rate. So if you're talking about a classic 1 to 2 risk reward, it's going to be 1 to you're going to be like 33%, let's say like 35 because of fees. If you're talking about like 1.5, around like 42 43% win rate. In this case, you can achieve reasonable win rate and risk reward. This is reasonable reasonable metric. When we're talking about like 1 to 3 and 1 to 1, 1 to 2 risk reward, it's perfect for like day trading, and most likely your setup gonna play out. Why not use like high risk reward? You can achieve like 1 to 3, but your win rate won't be great. You can do you can keep a record of all your trades and just test it out. You will have let's say like 100 trades. You have to do it with 100 trades. So like, on one account, you will only take like 1 to 1. Actually, like let it be like 4 accounts. 1 to 1. On second account, you're gonna take 1.5. On third account, you're gonna take like 1 and a 2, and a third 1 and 3. You can even open like same position, and it will show you like real results. So at the end, most likely your accounts that had like 1 to 2 and 1.5 will be in significant profit rather than like other accounts. It's because like math doesn't work this way. So even like 1 and a half will have like better result rather than 1 in the 1 risk reward. But everything that goes above like 1.2 or 1 and a 3, you simply won't achieve this risk reward on the chart due to market condition. Yes, with 1 to 5, 1 to 4, you have great results, but it's only working in a long distance and with personal accounts. So if we're talking about like prop firms, I'm afraid it's almost impossible to achieve such trades. Regardless, what you can do, try to if you cannot deal with this, you wanna have crazy risk reward like 1 to 5, 1 to 6, etc. I recommend you to have a trading stop, or you can fix half of your position at like 1 to 2 risk reward. Let the rest ride with a stop at break even, or like 80% of your position. You will see that you probably benefit the most when you're doing this way. So just try to fix 80%. If you can't manage your desire to take like 1 to 5, 1 to 6, or like etc. like trades, try to do that, and you will see that most likely you will become profitable. And you have to measure such things over long distance. I'm not talking about like 5 trades, like 10 trades, at least like 100 trades. So it might take you a year, or if you're scalper, I would say it might take you like a couple months. But the difference is gonna be like significant. So try this out. I know like few people can tell me like about some guy who's like one of the best scalper in the world right now, and his average risk reward like 1 to 4, but even he said his win rate about like 30%. So as you can see, we have like 1 to 4 risk reward, and like 30%. Yes, he's gonna be in profit, but can you like stand this amount of pressure, because you're gonna be losing almost like every single time. Plus, if you're trading with prop firm and you have like, let's say, lose streak, you will blow your account, and nothing you can do about it. This is just simple math. On long distance, if you have perfect risk reward, and on long distance, I would say 1 to 2 risk reward, or 1.5. No, 1.5. Probably one of the best, because you can maintain consistent like 40-45% win rate. It's possible, even maybe like 40% rate. Then if you have such win rate, like bad market condition, for example, you can move to like 1 to 3 risk reward. Everything that above, most likely you're gonna get like stopped before you see your profit in your account. Something like this. Do you have any questions, guys? If you do, feel free to hit me up in Discord. Thank you for watching, and have a great day. Bye.